Real Estate Matters. I'm Ryan Anderson, and I'm here with Giuseppe Battaglioli with Fairway Mortgage. And we're going to do our mortgage market update. And by the way, it's December 15th. Happy holidays to everybody. I wanted to share a story that Giuseppe and I had from last month. We had a couple that was buying a house, and Giuseppe was doing the loan. And they were second-time home buyers, so they were going to go buy their second house, and they needed to sell the house they were living in. Well, we were coming up to the closing date, and the buyer of the house that they were selling, his loan fell apart, and we thought it was going to be over. Well, the lender said we need to delay closing about 5 days. Well, we were scheduled to close on their new house that same day with Giuseppe and his team at Fairway. Because Giuseppe is a broker bank, which means that they fund all of their loans in-house, then they sell them to other banks around the world, the money was already there, ready to go. So we would have been able to do both closings, but since the buyer of the house that my clients were selling couldn't buy, we had to delay it 5 days. The great story about Giuseppe and why I love working with Giuseppe is because the money is always there, they're always under budget, and everything's on time. In fact, that's their slogan, on time, under budget, no surprises. Well, 5 days later, we get to the closing, the money is still there, they had the money ready to go, there was no delay on the buying side. The sellers, we were able to sell their house to the buyers, smooth closing finally, even with the hiccup, because we had him in place and their team, nothing went wrong. But I did want to have Giuseppe share a little bit about, it's December, it's the fourth quarter, what's going on in the market, and what's new news across the country with mortgages?
Thanks, Ryan. Well, there's a lot of developments, a lot of good news, and then just some things to kind of keep an eye on. First and foremost, the Federal Reserve actually came out this week and they announced that they will do everything they can to continue to keep rates as low as they are, and perhaps even lower, and they're going to do this until they've kind of tagged it where until inflation gets over 2.5% or unemployment gets below 6.5%, they are full steam stimulating the economy, keeping rates low. So this is really good if you're in the market to buy a house next year. One of the things to kind of keep an eye on, though, is the FHA loan program has been announced this past week also that it's a very popular loan program. I'd say, almost half the United States has FHA loans. So great loan program, low down payment, low rates. But some of the changes that are being proposed for next year are going to make it a little bit more expensive. The mortgage insurance will go up again, which is kind of what we've seen the last couple of years, so that's really nothing new and unexpected. Something else that I heard, though, and I've read, again, hasn't been confirmed yet, but it seems like they are going to try and have you keep the monthly mortgage insurance, which normally you can get rid of that as soon as you have 20% equity in the house. Keep that for the whole life of the loan, which makes that loan now, again, less attractive and conventional loans more attractive. So just important to talk to a lender up front so that you know all your options.
Yeah. So basically, to sum it up, mortgage, the primary mortgage insurance could last for as long as you own the property, which could be a new law that goes into effect. Secondly, if unemployment rates stay high, mortgage rates are going to stay low. And the Fed is committed to being on that track, if I said that correctly.
Correct.
Were you going to say something else?
No, I was just going to say, home prices, I think you were going to touch on this. That's the one aspect. Rates have been really low. Guidelines, for qualifying, most people that I talk to are still saying, I can't believe I can qualify for this much home. And this is with normal 30-year fixed loans. It's not the funky stuff that existed 5-6 years ago. So a well-qualified borrower can still buy the home that they want for the payment that they want. And so the only thing that seems to be really moving is that since rates will remain low, values we've seen, how much have they increased in the past year in the Denver area?
Averaged about 10% increase for the last 12 months.
Okay, so even though the Federal Reserve is committed to keeping rates low, there's some economists that are saying that rates may move up as the economy continues to heal as much as 1% in the next year. Now, that still puts rates in the mid-4s, which is a really low interest rate, but as your interest rate goes up 1%, if you want to keep your same monthly payment, you are going to have to lower your purchase price about 10%. And so if you wait another year, you know, and values go up another 10% and rates move up, you're going to be looking at about 20% less home than what you can buy today.
Yeah. It's the classic 3 L's, and I'll sum it up with this. The 3 L's: low inventory, low interest rates, and low prices. Now, low prices have been going up over the last 12 months, and I can predict, my own prediction is the next 12 months it's going to continue to go up. We've seen a 10% increase this year in 2012. We're probably going to see another increase as the next 2013 comes around. So if you're thinking about selling or you're thinking about buying, either way, it's a hybrid market right now. It's a great time to sell if your house price has been down before, now it's gone up. It's a great time to buy because interest rates are low and you can get an amazing 30-year mortgage. Either way, if you have any questions, please call me. I'd be happy to help. And as always, if you call, I'll look forward to our call being the best call of your day.